All right, welcome everyone. If you're new to the channel, we cover stock market technical analysis. We're going to look at trade ideas, point out what we're seeing in the charts. Let's get right into it. So we've got the Fed. A couple things I want to point out. Jerome Powell is going to come out and talk today in some pre-recorded speech to the House, I believe. But then there's going to be a Q&A session. So there's opportunity there for the Fed to kind of talk its policy, and this is how they do it. They use their speaking engagements to kind of chip away at the moves or the policy that they're trying to initiate. So look for reiteration of whatever kind of policy they're trying to do. There's the potential they're going to try to talk down some of this inflation stuff. That's what we saw in the last Fed meeting last Wednesday. Is they're really trying to talk down the consumer price inflation, commodity inflation, trying to get those prices down a little bit. And we have seen those come off a little bit. So that might be something they're going to continue to try to do. Basically, hint at a potential rate hike without actually doing any hikes or doing any policy changes. All right. They're just trying to They're trying to prep the market for a potential hike, and likely what they do is they do that kind of stuff to see how the market reacts, to give them an idea whether they can hike or not. So something to look for there in the meeting. Now, looking at the SPY, getting into these charts, I want to go to the hourly chart, and basically we now have a gap fill right now. So we gapped down last week, or I guess this was on the 18th. We gapped down, and we're now back testing that gap fill or gap down. So here's the gap down area. It's basically right there, anywhere from about 421.80 up to about 421, about 422, and we're about 50 cents over that gap. So again, this could be the area where it's going to top out and roll over. Or another way to look at it is if the Fed comes out and the market finds it bullish, then you do have this March 2020 low area, and you've got a trend line I have marked out where we held support there, and then we finally broke, and we could come in for a full back test at about 424.72. What I would think is if we're going to do that back test, we're likely going to pop above and make a slightly new all-time high, and then fail up in that area. So things to look for. I don't know exactly which way it's going to go, so we just have to trade what we see, and so likely the market's going to wait for the Fed to come out, and then it's going to make a move one way or the other. Looking at the Qs is making all-time new highs. You can see right here, right there, making all-time new highs. Now, what does that mean? Is that bullish? I mean, anytime you make an all-time new high, in the short term at least, it is bullish. You can't knock that because you're making an all-time new high. But and there's no resistance above, essentially. But the thing to look for is if I look at the RSI and the PPO, which are momentum indicators, you can see that this is just another divergent high. Here's the RSI making a new divergent high, meaning this is a lower high in momentum than the previous high. So here's your high in momentum. Here's a lower high in momentum. And it looks the same on the PPO. There and there. So there's your former high in momentum and a lower high in momentum there, while price is making a higher high. So it's making a higher high on less momentum. All right. So this is what we look for to give us a sign that a trend reversal is likely. It doesn't mean it's guaranteed, just means that it's likely. And I'm looking for that. So the signs that I'm looking for, now that we've made an all-time new high, we could pop up and hit this trend line right up here. It's up there at about 353, 354, somewhere right in there. That trend line comes off your March 2020 lows on the Qs. You can see there's your March 2020 lows, held support once, held support twice, finally broke, and we actually held support again. You can see the reactions. We had several days where it was battling it out on that trend line support. Finally broke, and we got the sell signal right there. So this is just back testing. So if they pop it up and do a full back test, that is the best area, if you can get it, to short this thing at, right up in here, which would be a back test of trendline resistance with negative divergence intact. Now, doesn't mean we're going to get that full back test because we have made an all-time new high right now, and we're making it with negative divergence, so we could fail here. Looking at the hourly chart, I continue to just walk up this short-term trend line that we're walking up right now. And this only goes back a couple days, but just extend that out, and you can see we've been walking up this trend line. We held support, held support, held support, held support. 4 reactions now on this trend line. So a breakdown, an impulsive break of this with an hourly close of below would be the next sell signal that I'm looking for. So on the daily, it just shows right there. There's the trend line. It's kind of this secondary trend line we've been creating while doing a back test of the primary trend line from the March 2020 lows. All right, a break of the secondary trend line sets us up for a pretty substantial move to the downside. And until I see it, though, on that hourly candle, there's nothing to do. We're just sitting on our hands waiting. And we'll look at some sectors. XLF. XLF is on a sell signal. The selling, in my opinion, is likely not over. And I think it's actually just getting started. But you have a sell signal coming. You know, this is your uptrend line, your bearish rising wedge. We got a nice impulsive breakdown last week. Just a big, nice sell signal. And then we hit support. You hit your first level of support about 35.35, and we're getting a bounce or, you know, a slight reaction. So we could bounce a little higher. I'd say we could probably go all the way up to 37 potentially, and then roll down like that. All right. So I'm looking for, you know, more selling to show up in the financials, even though we could, you know, bounce in the short term before that selling shows back up. Still looking for prices to come down to about 32, 33, right in this area. And that comes back to your longer term trend line, which is, if I can show it, if my chart will update, coming from 2011, all these weekly support. I'm looking at a weekly candles chart right now, and you can see this is long-term stuff, but support all through here. There's support. Finally broke. It was resistance once it broke. Then it recovered, and it was support again. So lots of reactions around there. I'm expecting us to come back down to that trend line. And, you know, do we break? Do we hold down there? I don't know. The trade right now is just to move down to there, and then we'll have to evaluate what plays out. Here's the industrials going to the daily chart. Now, the industrials broke its first level of support. So going back to the March 2020 lows, clear uptrend line right there. And at the top of the trend, we had negative divergence, telling us we were likely going to get a break of trend line support, and we did. There's your break. So that initial break was a move, you know, about 5-6% down. And then we bounced, you know, I don't know why we bounced here. I didn't really see a level, but, you know, they bounced, but we're bouncing right into resistance because we actually broke that first level of support at about 101.50. You can see we had a lot of reactions around there. It was resistance here. Once we got above it, held the support all the, you know, 5 or 6 times. Finally got the impulsive break right there, another sell signal, and we're just back testing right into resistance. So I think it's likely we're going to fail here, but again, they like to chop it above. You can see how they're intraday moving it above, running stops, doing what they do. And I'm looking for more downward price action. Next level of support, so I'm looking for something like that. Next level of support down to about 97.20, and then we'll likely get a bounce down there. So that's what I see in those right now. And just to shore up the tech sector, because this is really where I'm zooming in on and really focused on is tech. So here's XLK. This is tech, but it doesn't have Amazon in it. And basically you can see we're making a new high right up here today, making a new high. And yet that new high is still a divergent high. Negative divergence remains intact on XLK. Telling us we're likely going to get a pretty substantial correction. Now this one has some support right down here. You can see we've got a trend line down here, so we could come down and sell off down, 5-6% down to this trend line. We'll be watching for a break of that trend line support. But the Qs has a better trade setup, I think, than XLK. Just keep an eye on this one to really evaluate the tech sector. So someone asked me what I thought of oil, and I think if you're going to get a broad market sell-off, that's what I'm looking for. I think it's going to show up here pretty soon. Most likely oil is going to sell down as well. And I'm continuing to see signs that, the commodities need to come off a little more and sell down some more. That was a really overheated trade. Everybody had piled into the commodity inflation trade. So important to note that when you get everybody piled into one side, usually that's about when you get a correction. So that's why I really got out of a lot of those ag commodities and expected gold miners to kind of sell off a little more. Now, oil hasn't really sold down. The gold miners have sold down. Ag commodities have sold down. I think they have a little more to go, but oil has not sold down. So I'm looking for oil to kind of come off. And you can see here off here. This is ExxonMobil, a large component of the oil ETF XLE, and you can see here clear uptrend line right here. But we put in negative divergence. So I have it circled. There's a divergent high right there, and you can see the PPO. Just clear negative divergence, and the RSI has that as well on the daily chart. So then you look for a break of trendline support, and we did break. It came in the form of a gap down, not that impulsive. It just gapped down, and then it just treaded water sideways, and then it's been back testing ever since. I am expecting this to roll over. So first level of support, 55.27. We break that. I think it's likely we're going to come down to about 49.77. Those are the levels I feel comfortable with right now. I don't know about much lower than that, but I'm looking at this one selling down potentially, that's about a 20% drop. That's a pretty healthy correction if we're going to get that. So look for that. Doesn't mean we're going to get it, but right now we're trading, underneath that trend line support. And just continuing to look for signs that oil is going to sell down. And I continue to watch MGM. No sell signal, no reason to short this thing, but we've got another reaction on support. So there's your reaction right there. And you can see we've just been walking up this trend line, held support all through here, several reactions. The reason why I don't like buying at support right here for just a continuation of this uptrend is the fact that there's negative divergence that's intact. So you can see clear extended negative divergence. Basically, all of this price action all through here has been divergent high price action. Every new high has been a negative divergent high, meaning that we're likely going to get some sort of a gap down and probably going to wipe out all of this price action in a pretty swift move to the downside. So whether we gap down and just sell down. So I've got some support right here at 36.72. Next level support about 32, it's about $32. We break below that, 23.62, and those are the levels that I really feel comfortable with right now. I'm looking for a break and a sell signal, and it's likely going to be swift, and probably an ending move will be down here. We're likely going to hold some support right in here, and that might be the end of the move. So keep an eye on that, but it still looks good to me as a setup, but it's not actionable yet. We still need to see that big impulsive breakdown of this trend line support to give us that sell signal, whether it comes in the form of a gap or just an intra-market sell-off. I'll be watching for it. These banking stocks look like they have more selling. They've taken a breather the last couple days, but I think the selling's not finished, and likely we just started the next downtrend. So here's an example, Ally Bank, and this one clear uptrend. This is a long extended uptrend. At the top of the uptrend, we had big negative divergence. And we finally broke the trendline support right there. So once you break trendline support, you start a new trend, or you likely start a new trend. Nothing's guaranteed. So you make a big move down. We've taken a little bit of a breather, but you can see the selling's just kind of ever present still. It still shows up. So I'm looking at the next level of support on Ally at 43. We break below that. I see 33, 37, 30, 33.50, somewhere right in there. And those are the levels that I've got on this right now. Now, if we get that, let's say we get that final move, from high to low, that's going to be a 40% drop. And from just the sell signal to the low, potential low, 38% drop. So that's the trade idea. I continue to like it. Looks good. The banks, even on when they're trying to rally, the rally that they've been bouncing the last few days is already starting to look weak. You can see Bank of America just, only up barely, pretty much flat. It looks like the buying's drying up, and we're going to continue to the downside on these financials. And the same goes for a lot of these industrials, things like LPX, JCI. These are back testing, but we broke trend line support. Here's your trend line on JCI, bearish rising wedge, big negative divergence, break of trend or sell signal. You do a back test, kind of wash out some weak hands, and then you continue down lower. So still looking for this to get down to 62.32 as the next level of support. Likely a lot lower. I think we're probably heading down to 52.52 and potentially 47.88. Okay, so that's really all I see. The Fed's going to come out here in a few minutes and start talking, and we'll see if that moves the markets. Not a whole lot of change so far this morning. I don't see any actionable trades right now, just setups and continuation of the trades that we're already in. So a lot of the shorts that I'm in, I've talked about in the former videos, such as LPX, JCI, EMR, Ally Bank, Boyd Gaming. I'm short DraftKings, FITB. What else am I short? SCHW, Toll Brothers, Tesla, URI. They all look good and look like they're just, taking a little bit of a breather as they continue to work their way lower. All right, guys, if you guys are new, and you want to take the training course, I have a course. Link is in the description below to give you the skill set needed to really find your own trades, evaluate how to trade yourself, and use technical analysis to really gain an edge on the market. So take that course, link in the description below, and leave me a thumbs up on your way out. Appreciate it. Talk to you guys later.